So YouTube, what's going on? How you doing? Wealth Wednesday is live, simulcast on Instagram and YouTube and StreamYard. We are powered by StreamYard. I want to say thank you to all of the folks who've been tapping in. Last week, we talked about interest rates going up. This week, we're going to talk about something a little bit closer to home, and that will be your tax return. We're going to talk about your tax return. We're going to talk about some tricks and tips that I've learned over the years on how to maximize your return. I find that around this time of year, a lot of folks want to find a way to look at their ways that they can save money for next year. And your tax return is one that a lot of folks don't really talk about. You kind of just go, if you owe money, you owe money. If you pay taxes, you pay taxes. But sometimes it's important for you to kind of know the ins and outs of what you can do to save money, as well as to prepare yourself for next year. Because part of doing a tax return isn't just to, have your stuff filed correctly this year. It's about preparing for the following year. And some of you may have had a pretty good year last year. I know the folks that I know have had a fantastic year last year. So this year we're going to talk about that. We're going to talk about that. We're going to talk about Bitcoin. I want to talk about that real quick, just because I see something happening in Bitcoin. I want to tell you guys about it. And so we'll talk about your tax return, taxes, your W-4, and we're going to talk about cryptocurrency a little bit. So hang in tight. Let me plug in my laptop real quick, y'all. 1 second now. Got to make sure I have juice. This thing dies on me, then what good is a Wealth Wednesday when you got no power, right? How's everybody doing? This cord wants to snake me today. I got to get me a new Apple cord, man. This thing is like trying to die. 1 second, folks. There we go. Got it. Trying, you shall succeed. All right. Okay, folks. All right, so let's get into it. So first and foremost, I want to just do a quick shout out to all the students in the Way Financial Literacy course. We're currently in week 3 going into week 4. So I want to shout out all you guys for coming through. And again, for sharing your energy, sharing your time, being a part of the program. And I hope that you're getting a lot of benefit out of it as I'm hoping to put into it. So I'm glad you guys are doing that. So let's start off with this year's tax returns. All right. So I'm going to share. Am I going to share a screen? I'm going to share. I'm just going to talk to you guys. So every year around this time, usually January 28th, most of your employers have to give up your W-2 in order for you to file your tax return, right? Now, on your tax return, when you're filing it, before you actually submit it, you actually have the ability to go back into last year when it comes to retirement money. So a 401k, for example, a traditional IRA, for example, these are vehicles that you can use to put aside money, tax deferred. And what that can do for you is it can actually give you back a bigger return on your tax return. Because anytime you put away qualified money, that equals you minimizing or lowering your adjusted gross income. So let's use an example. Let's say you made $20,000 and you're about to file your taxes right now, right? You're able to actually deposit up to, I think it's $5,000 into an IRA right now, a traditional IRA, to lower your actual gross income by $5,000, meaning that whatever taxes you paid on your current W-2 will be reduced by your overall AGI now because you've put money in a qualified account. And that, again, can save you substantial money. Now, there are different ways of looking at it, and you don't have to look at it as going backwards and doing it retrospectively, but you have until you file your tax return to put money into last year's contribution year. So what some folks that I've managed, what they've done is they've actually pushed back their filing. And what they wanted to do was literally dump in as much money as they could into their 401ks or into an IRA, after the fact. Now, what that could do for them, again, is literally minimizing or lowering their taxable income. And that's one way to do it. Now, if you're not that type of person where you didn't think about this until right now, right? Well, look at the return you had last year and ask yourself, do you want to have a higher return or a lower return? Okay. Now, when it comes to the money that you get back from the government, right? Let's really talk about this, because I don't think a lot of folks have this conversation. When you get a nice big tax refund, two things could be at play. The first thing could be, well, the main thing is that you've overpaid in taxes, which means that you gave the government your money in advance, received no interest for it. And because you gave them so much and more than you were supposed to give them, they're giving you back the money that you overpaid them. That's what a tax return refund is. A refund check, that's actually what it is. It is a refund of an overpayment to the IRS. Okay. So when I think about things that you could overpay that usually give you, a benefit, you could think about overpaying into an insurance policy, benefit, overpaying into a asset of some kind, benefit because you get the value of the asset, overpaying into anything literally will give you a benefit. But overpaying into your into the IRS doesn't give you any benefit. It gives you actually no interest return, nothing. So one school of thought says, if I can overpay the IRS and get a 0% interest for that, does it make sense? What's going on, Auntie? How you doing? Long time no see. um, does it make sense to not maybe overpay something else that can give me a rate of return that's better? With my students this week, we were looking at bond funds, bond mutual funds, right? And the average rate of return on a bond fund is anywhere from 2% to 8%, right? And it's a bond, so it's a very secure type of investment. If you overpaid into a bond fund, you'd at least get 2 to 5% back. But overpaying into the government, you get zero. You get zero back. You just get a check, and you're pretty happy about it because it comes at a time where you might need it. But one school of thought says that if I'm going to overpay for something, why not overpay for something that gives me a rate of return? One school of thought. So the second way is if you actually designed your return to be heavy on deductions where you're going to get back money. Meaning, let's say you have a business and you have deductions and you have a Schedule C, or maybe you drive, or you have mileage credits that you can take because you use your vehicle for business purposes, or you have several different expense accounts for business. All of that, those are ways of you literally expensing out a lot of the gains that you're making in a way that's going to actually save you money at tax time. So when I was starting up my nonprofit, and I'm a nonprofit, my for-profit business back in 2000 and when did I start? 2009, 2010. So when I started that, my whole thing was I wanted to have a bunch of deductions that I could take to lower my adjusted gross income. That was the goal for it. So I literally started a business to literally funnel my expenses through the business so that I can eliminate personal expenses and put those onto the business. One of the expenses that I eliminated was also driving, because I would drive a lot for my business. I would say anywhere from 8,000 miles a year, 8,000, 10,000 miles a year I would drive for my business. So getting that 51 cent credit, on my tax return was a boon for me because it literally reduced my income by so much money. And I was like, okay, this is great. That was just one of them. All the other business expenses, I funneled it through my tax return. So my tax returns were usually really big back then. They're still kind of big now, but they were big just because, again, I was utilizing a business to minimize all of my daily business expenses, which happen to include some of my personal expenses. But they're for the business. You get to utilize that. So for someone like that, an entrepreneur who's using your business as a way to shelter your taxes, you're going to get a big return anyway. Now, the question is, what do you do with that return? Right? What do you leverage with that return? Because if you're designing your spending in a way where, again, you're still overpaying, right? Because even in my case, I'm overpaying into my taxes every single paycheck I have because I have a business that's going to be taking some of those expenses away. So how can I funnel my money in a better way? So what I started doing was I started overfunding my retirement accounts. So what I would do is every year I would go either from 5% up to 10%. I've had it as high as 15% of my check go to my retirement account, whether it's my 403B, my 401k at the time, or an IRA. So what I would do is I would max fund all these things. And when that happened, when I get the return back from my taxes, I'm just utilizing that as another savings vehicle. I'm just literally dumping that into something else. So I never really took that money to myself. I always used it to funnel an asset. So that's one thing I would say for a lot of business owners. If you are looking to, raise capital for, more products in 2022, or looking to expand your business, if you've been having a huge tax return that you've been getting money back every single year, well, maybe funneling that into something like your business might be useful. buying new equipment, buying things that are going to help you sell better. All of that is a good use of your tax return money, especially if you're getting an overfunded tax return, because you're literally paying more than you're supposed to pay. So those are the two schools of thought. I don't know which one you'll fall into, but again, it's either A, you're overpaying just in general into your tax return, or B, you have a business and you're using your tax return as a vehicle to fund other things. Okay. So when you look at your tax return, one of the things that you'll see is you can either do a regular 1040 if you're a regular employee, or you can have a Schedule C if you have a business. There are a ton of deductions right now that you can take advantage of, especially if you use your home as a part of your business. A lot of folks that actually had worked in offices are now working from home, and there are a lot of deductions that you can take from just actually working from home. And whether that be looking at the light bill, looking at your internet and cable bill, looking at any of the equipment that you buy to outfit your home to be an office, all of those things become a part of your deductions that you could take on your Schedule C. Now, granted, let me just say one thing. I am not a tax accountant. I'm not a tax preparer. My only caveat is I've done my own taxes since 2006. So I have a lot of experience doing my own stuff. As of last year, that was the first year I actually had an outside accounting firm do my taxes for me. And the reason for that was because I have too many businesses now. So it didn't make sense to keep that on my pocket. That's not a good thing. You don't want to have, you don't want to have that happen. So whenever you get into the business realm of things and you got to kind of start now accounting for things, it's important to be able to transfer that liability to another party. Because I didn't want to have to go and defend, 4 or 5 companies at this point now. That's a lot, so have an accounting firm take care of that. And that way, if there's any sort of audit that needs to happen, you send them their paperwork and they go and they defend it for you. Right. All right. So let us talk about any secrets about tax returns. Okay. So let's see. We'll just have a conversation today because I want to this is tax time. So everyone's thinking about what they're going to do with their money. One tip that I'll give you when it comes to preparing your taxes is to actually get 2 quotes from like an expert. Like literally go and try to figure out your taxes yourself, like on a taxact.com or what's the other one that I use? TurboTax, any of these. Just literally log in and start going through it yourself. And I'll tell you the reason why I think that starting the process of filing your taxes alone is a good thing is because you're going to see the questions that sometimes your tax preparer won't tell you about. So when I started doing my taxes, the first time that I did, I was scared out of my mind. I didn't know what to do, but I did it anyway. And I went through and I just answered the question one at a time. I would go, okay, what's this question? What's your address? What's your W-2? And put all the information on your W-2. Okay. Did you have any purchases or any major purchases this year, like a home, a car, anything? Like it just goes through the questionnaire and you just go through it one by one. The reason why I would suggest that everybody start going through a tax act or a TurboTax questionnaire and just kind of try to start the process of filing yourself is because you want to understand what the IRS is looking for. You want to understand what ways you can utilize this tax situation to benefit you, whether it be today or next week. When I filed my taxes myself, the first thing I realized was there were deductions that I knew about that I could take that my preparer wouldn't necessarily tell me about. So the first one would be charitable donations, right? Like this is back in the day. So this is when you actually got dollar for dollar charitable donations back. I knew that I would give money in church. I knew that I paid tithe. I knew that I would donate money to certain nonprofits or certain wildlife reserves and funds, stuff like that. And I didn't even get that money back. So I was like, okay, cool. So that's one question I'd always set aside. I'd know I want to make sure that I've set aside all of the donations I've made this year, right? And I would actually find things to donate to, because a part of knowing what you can get back as a deduction on your tax return, it allows you to move free, during the year. So there was usually a banquet or a nonprofit dinner that I would pay $500 for to, just promote my business or just to sponsor or support, the event. And I would always put those things on my tax return. So I think every year I would spend maybe anywhere from $2,000 to $5,000 in just donations to like charitable dinners, events, whatever. And that is something that I build into my tax return because I know it's a question that they're asking and it's something that I'm conscious of wanting to do. When it comes to when you own a home, the amount of opportunity that you have to get deductions for owning a home is incredible. So if you own a home right now, I would definitely recommend that you, again, go through the process. Your mortgage company, if you have one, they'll send you the mortgage tax document. Okay, cool. Mark that down. But then the better part is being able to look at all of the different deductions that you can have for making improvements, capital improvements to your home. If you decided to put on new shingles, a new roof, you decided to do painting, you decided to do some interior work in your home, new stuff around, like whatever it is, those are all things that you can actually file on your tax return. Again, these are all a part of it. If you have a rental in your home, same thing. So your tax return is really a very loaded document, but once you've gone through it once for yourself, then sitting with a tax preparer, it puts you in a position where you're prepared for the conversation. And one thing I realize with a lot of folks is that they want someone else to do it for them. They want someone else here, here's my W-2, just file my taxes for me. You're missing out on a ton of things because you're not even understanding what they're doing. And they're walking you through the basics, 1, 2, 3. But I feel like by you understanding what they should ask you, you're going to walk into that table as an expert in the room. You're not going to walk in, just listening to what they have to say. I think for me, being equals with the folks on the other side of the table is an important thing for me. Like, I want to educate folks to be at a level where they can walk into a room with a professional and not feel intimidated or overwhelmed. And I think that during this time of the year, in tax time, everyone feels overwhelmed because they're going in, they're hoping that they don't owe money. And let's talk about that. So when you actually owe the government money, right? That's actually the best case scenario. And I know you don't believe me, but it is. Most of the wealthy folks that I know usually owe money to the IRS. And the reason why, I'm not talking about the super, super wealthy. I don't know anyone like that. I don't know any billionaires. I just know, a few millionaires and whatever have you. They usually owe money to the IRS. And the reason why is because they make so much and they're not trying to hide that. They're not trying to hide how much they make. They're not trying to shelter it. They're just making it, paying it. And there is a freedom to knowing that you have the money to pay your return, number one. But number two, the most important thing is they're not loaning the government money. That's the most important thing. So whenever you get a tax return, a tax refund, you're getting a refund of the money that you overpaid. When you're paying the government, you didn't pay enough into it. So you're just catching up, which means that you had access to your money for the entire year. You didn't overfund anything. You paid the minimal amount and you have a little bit left to pay off. Cool. You had your money throughout the entire year though, to invest it, to do whatever you need to do with it. So it was working for you the entire time. And then you gave them whatever difference they were owed. To me, that's a position of power because you then are the person that actually has access to your funds for the entire year. Perfect example. Average tax return, let's say it's $5,000. You get a refund of $5,000, right? That means that over the year you paid $5,000 into it and they didn't give you interest on that. And that was just money that was just lost to you because you gave it during the year. And at the end of the year, you filed it for the tax return. You got it maybe 3 months later. That was money that you should have had last year. Now let's look at the opposite. Say that you didn't give them the $5,000 in taxes. Let's say that you actually underfunded your taxes and use that $5,000 to buy a bond or buy a stock or buy coins or buy whatever. Well, that money is now growing at an interest rate the entire time for the entire year. At the end of the year, if you owe them another 200, $300, you can just liquidate 200, 300, put it there, and same thing. Only difference now is that you had your money working for you the entire year as opposed to having them hold your money for the entire year. So that's really the main difference between folks who get a refund and folks who owe the government money. When you owe money, typically, if you do it the right way, it's because you knew that you had access to your money for the entire year and you're utilizing it to that purpose. So that's where some folks want to live, and that's a good thing. Don't get me wrong. Like neither option is bad. They both just have benefits and setbacks. All right. So I think the next thing I want to talk about, if there's no questions about that, I'm gonna say what's up to the room. What's going on, brother? What's going on, K2? What up? What up? What up? And that's Hafid J. I don't know how to pronounce that. I hope I pronounced it right. What's going on, brother? Nice to see you. All right. So what I want to talk about, okay, so next, I took a picture of this. Let me see if I saved it. I took a screenshot of this. All right, check this out. All right, so this is Bitcoin right now. And if you guys aren't, let's share screen. Let's pull up something over here. I'll use .com. Okay, and BTC. So for my YouTube folks, I'm gonna pull it up for you guys right now too, so you guys can see the same things that the other folks are seeing. BTC. Okay. Share screen. Okay. Share screen and window, Bitcoin. Okay. So now YouTube, you're with me, and Instagram, you're already with me. Okay. All right. So I want to talk about this real quick. So I don't know how many of you guys are invested into cryptocurrencies, but let's look at Bitcoin. I'm going to talk about two cryptos today, Bitcoin and Ethereum specifically. Okay. Now, one thing that I want to just say about Bitcoin is that I'm seeing a trend, and I'm sure some of you are seeing it too. This is, let me go to the year to date. Okay. Chart. Year to date. Okay. It looks a lot better in the one on my phone. But this is just showing what Bitcoin has been doing. And I don't know if this is the right one. Is that the right one? Yeah, I think that's the right one. Let's go here. That chart looks a little weird here. And there you go. Much better. Okay. Okay. I mean, that's the chart. That's what it looks like. Okay, cool. So this is Bitcoin's chart. And what I'm going to show you and what is kind of interesting to me is this. Here we go. I got it here. Perfect. I wanted to look the exact same as above and as below. So Bitcoin right now is trading for 36,991.82, right? It's down 4% today. If you look at this chart, I have a year chart, which goes back 12 months. You see a trend? What do you see? When you look at a chart, I want you to understand that you can tell a lot about what a stock is going to do before it does it if you know what to look for. And this is outside of looking at news articles, outside of governments saying that they're going to shut down mining, outside of all of that other stuff. This is outside of all that. Just look at the chart. Just look at the numbers. No emotions to it. Just looking at the numbers. It's not always safe to do this, but in this example, I think it's safe. So over the last year, Bitcoin has shown that it has the potential of going from 36,000 up to 63,000, back down to, and what date is this? This is in, let me open up my screen here so I can see more. We're going to maximize the screen. This is back in July. Okay. So it was in the beginning of December last year, it was trading at 19,000, then 23, rose all the way up to 63,000 back in April of last year. Then it took a dive in the summer, COVID obviously, and fear and scared. Okay, so in June it went down to 32,000. Then it popped back up in September, went back down in October a little bit, back up in November, and now, right now, since November until now, it's on a decline going back down, right? Back to 36,000, and now it's on an uptick again. This is a perfect example of when it might make sense to look at the trend and forget the news, right? Look at the trend, forget the news. This is a simple buy the dip example. Again, and every time this happens, we've said this about Bitcoin and crypto specifically, just this one specifically, because there are a lot of companies that you can't buy the dip. The dip just, it continues to go down. Many of you in your portfolios, if you've been following us, we've had 12 stocks that we've been tracking since the beginning of 2021, right? All of them are down, all of them. And it's not down because the companies are failing or they're going out of business. No, it's not because we've had a pandemic and they haven't been able to utilize, the economy to boost themselves. They haven't been in a position of success, but that doesn't mean that their plan isn't a successful one. So what we have been doing here is we have been doubling down on our assets, our investments. So the things that we're selling for $20 back in January of 2021 are now selling for $12, right? We're doubling down. We're buying more shares, lowering our cost basis. Because in the market like this, again, 2022 is going to be a rough year for a lot of companies, but there are going to be winners that come out of this. And you won't know if you have one until after the fact. This is a perfect example of when, again, a stock is looking to turn. So I'm looking at Bitcoin now, and I'll look at the last 3 months. Okay. If you're looking at our YouTube, you can actually see the candles. You can't see it on this because this is just IG. But on the candle side, as of 122, Bitcoin was in a bull move, right? A lot more green than red, a lot more people buying than selling. This is typically what has happened with Bitcoin. They'll have a huge downturn, and then folks start buying and buying and buying. And it's the same folks doing the same things. Because remember, Bitcoin is now being bought by larger financial institutions. It's no longer just giving, mom and pop, you and me, regular investors like us. We're not the ones that are buying the majority of these shares right now. It's financial institutions that have millions in dollars. And what are they doing? They're creating that. What you're seeing there is not something that happens as an accident. Okay. That is by design. And for a lot of us regular investors who look at Bitcoin and are afraid every time it goes down and so excited every time it goes up, understand that you're being played to some degree by large institutional buyers who are literally allowing that to happen. And what it's doing is it's shaking out folks who are afraid of crypto. Because every time you see it go up to 55, 56,000 and then shrink all the way down to 30, someone lost money. Somebody lost money on that. Every time that stock price goes down, someone is losing money. And every time it goes up, someone's making money. The question is, which side of the coin are you on? Are you the person that's just sitting there watching these fluctuations happen and you're just sitting tight and not doing anything? Or are you the person who is looking at this and saying, okay, I'm already invested. I might as well get more shares while it's low because it's going to probably double between now and the end of the year. What move are you going to make now with this, right? Knowing that interest rates are going to go up, knowing that the Fed is going to start raising rates, and that's going to have a negative impact on the stock market. What are those investors going to do with their money? This is how you have to start thinking when it comes to how am I going to pivot and position myself to be a successful person in 2022? This is something that you have to consider. You have to consider this because it's going to show you its truth at a time where you might be already overinvested or underinvested. Either way, if you're not in the game, you're not going to win. So for me, I'm looking at this and I'm going to say, this is a trend. And this is a trend that's being created around actual regular investors by institutions. And they're creating this trend. So understand, you need to take advantage of this, okay, as a regular investor. Let's look at Ethereum. Let's go back, finance home. Let's look at them real quick. And again, you're going to see a very similar market trend. Let's go year to date. Same thing. Go to the chart. And I want you to see 1 year out. For those on YouTube, do you see? Oh, sorry. Do you see? Same thing. We're going back a year. Let's go back 1 year. Okay. Boom. So back in March of last year, April, trading at 2,000. May, high of 3,700, 4,000 high. Okay, cool. Shrunk back down to 2,000. Again, choppy. Then it had a bull run right here. This was in July. Moved from 1,700 up to 39, right? That's doubling. That's basically doubling its value, right? Then you had a dip again in September, down to end of about October, dip again, and then you had another bull run pushing it through, right? Now, do you see the difference between this chart and the Bitcoin chart? Because I see a very slight difference, but they move the same. They move the same because they're being moved by the same factors. The only difference is that Ethereum is probably going to have a different run than Bitcoin because this is not limited, right? There's not a finite number of coins here. This is something that's continually being mined, right, over time. So this bull run that's just started, if you can see it here, they're on a bull run right now. It went from 24 and it's moving up to 27 right now, right? And this is over the last 4 or 5 days. That's going to continue because, again, what I'm seeing is that there's a trend. They're shaking out folks who have these positions and literally waiting for you guys to sell out because you're afraid. And then they're buying them all underneath you. So understand that this is not random. There's nothing random about this. Okay? There's nothing random about that. That is called supply and demand, and that is called how you can actually shake people out of a position that you want to be in. So let's say that you knew that there was going to be some new technology coming out, and you saw that folks were afraid and they kind of like playing into the fear and they were selling out from that new technology. Well, if you were savvy enough, you would look at that as an opportunity to get more shares, right? That's all that's happening right now. All that's happening right now is folks are positioning themselves in a way where they're going to be set up for success long term. Ask yourself, are you one of those people? Got to ask yourself that. Because if you don't think you're one of those people, you better find out how to become one of them, right? And this is a perfect example of a way to save money in a vehicle that's going to be able to kind of keep up with inflation, but also give you a position that long term is going to be successful, in our opinion, because all investments have an opportunity for failure. But I feel like cryptocurrency has the best chance of making it through this because it sure as hell won't be the US dollar. That's not going to make it through this. It's going to be something that is protected, something that has its own network or community that's going to be buying and selling it within themselves and is not being able to be conflated by or inflated, by some sort of Federal Reserve. Any currency that's going to be inflated by a Federal Reserve is not going to survive long term in this economy. It's just not going to work. So that's it, y'all. So I'm thinking that with these cryptos, Bitcoin and Ethereum specifically, if you don't have a position in them now, you should get one. And if you have a position and you're looking at your values going down by half, jump in and just watch this trend because you can see when it's time to get out. The only thing is that when you talk about cryptocurrencies, you don't really want to get out of those. You want to kind of continue to add to your position and not really move out of them because when you move out, then you're triggering taxes. And this is tax time. We're just talking about taxes, right? You don't want to have your taxes get siphoned off of your gains when it comes to cryptocurrency. So as best as you can, the idea is not to sell out, but to double down on your position. So if any of you currently have Bitcoin or Ethereum, any other coins right now that you see this trend happening where it's going up and down, and you can see it. You can literally see it. And it's not even going past its ups and downs. Like it's literally doing the exact same thing in repeat. Jump in on that trend until it changes. If you see it below a certain level that you purchased, buy some more and continue to dollar cost yourself into it. That way you're adding more shares of it while it's growing and you'll make back the money that you lost easily. At the next top, again, stop, wait and see what happens. If it drops again, buy low and continue to do that. Continue. All right. Buy the dip, y'all. Okay. So, what do y'all want to talk about? So that's all I got, man. We talked about taxes, talked about, making sure that you go in and look at your tax return yourself, because if you do that, you're going to have a better chance of knowing what questions to ask your tax preparer. And I suggested everyone get a tax prepared by a professional, just because it gives you a lot more opportunities to see things differently. I remember last year I filed with a specific strategy that won't work for me this year. So now this year, I actually have to use a different method because I want to qualify for different things this year. So instead of me minimizing what I make, I'm going to be maximizing what I make, right? So I'm not going to take every deduction that I have that I can take. No, I'm going to take some because I want to show the amount of AGI as a very graceful large number so that when I need to get access to more leverage, I'll be able to prove that I have the ability to earn it, right? So everyone's got a strategy. Know yours and know how to rock it. Okay. What up, Chev? What up, Dapper Realty? Hey, we got to talk about some real estate, man. I know Toronto market is going crazy and interest rates are going up. So you got to let me know what's going on in TO. All right. Well, folks, listen, thanks for guys for joining us. I mean, this was a really quick episode. I don't really want to talk you guys up until for an hour. I don't have to, I think for me, this is the fun part of this is seeing where things are for everybody and knowing that tax time, this is a time where you got to be ready for, filing your returns, knowing what to do when it comes to that, and not being afraid of it. Because the day that you start learning what a tax return can do for you, that's when you'll be able to actually spend your money in a way wisely every single year and know what the outcome is going to be before you even file. That's a beautiful thing. So I definitely recommend everybody download TurboTax, download Tax Act, go online and just go through the questionnaires and point out the questions that were important to you. Point out the questions that you may have had you may not know what it means or whatever it is. They usually have instructions or they'll tell you exactly what this question is looking to have you answer, and just write them down. Write down the questions that you have. That way, when you get to your tax preparer or when you do it yourself or you call me or message me, I can say, hey, by the way, what this means is this, that, and the third. You want to become very aware of all of this, because once you're aware of it, then you can move on from it and literally just allow whatever skills you have to benefit yourself throughout the year. One thing I'll tell everyone to do is, if you haven't looked at a traditional or Roth IRA, you need to look at it now. And that's something that's going to benefit you long term, especially if you want to have a nest egg when you retire. A lot of folks don't think about retirement as much as they should, and it's going to cost us a lot of money because we're going to live long. A lot of us aren't going to die at 65 like the people in our past. We're going to die at 120, 130. What's your plan for that? How much money do you need to make in order to die at 130 and be happy? So for me, what I think about is, do I have the ability to earn an income when I retire? Am I buying into assets that have the ability to give me residual income so that I don't have to work? So for folks, instead of you looking at, and there's two ways to look at this. You can either build up a nest egg and have it for retirement, or buy assets that have rent or have revenue or dividends that you could take from every single month that is your income stream when you're retired. I prefer the second. I don't want to have a huge nest egg anymore. I'd rather have income. I'd rather have multiple things feeding me income anytime I want it. That way, I don't have to worry about money. Money just keeps coming. I just figure out how I want to spend it or allocate it. That's where I want everyone to be when they retire. It might not be 2023, but whenever you want to retire. For me, my plan is 50 and out. I don't want to work past 50, at least not in a traditional job. So that's me. I don't have a lot of time. I'm not that old, but I'm getting there. So for me, in the next, 15, 16, 17 years that I have, 20 years, who knows, I'm young. I'm going to make sure that I go ham on creating income streams from every angle that I can consider it, and pay off everything that I have as a debt, all the mortgages I have, pay everything off in that time, and just sit back and watch everything just do this. That way I can take vacations. My wife loves to travel. Take vacations. We can go places. We can see things. Why not? But right now is not the time to think that way. I've got to build this thing first, right? So, all of us have plans and goals and objectives, and we have to start making those priority. Like literally start investing in your retirement from now. Start investing in that future life you want today. I don't care what your income is right now, what your net worth is. I don't care about any of that stuff. You got to care about what you want it to be going forward. What do you want it to be at the end of the year? What do you want it to be by the end of your retirement at 65? What type of life do you want to live at 65? And are you funding that right now? So these are the questions to ask yourself, y'all. But in the meantime, I'm going to step out of here. I'll catch you guys next week. To the students, definitely tap into your homework this week. It's going to be cool to read that book. Make sure you get a copy of it. If you don't have it, let me know. Just a quick shout out again to the students who are going through our course. You guys are the best. You guys and gals are the best. So definitely, if you have any questions, hit me up. Let me know if you have any problems. But in the meantime, get to that book, finish reading that book. And this chapter coming up is going to be fun. So we're going to talk about investments. So can't wait. All right, folks, if you're interested in our program, please feel free to DM me to get into our second cohort. We are obviously offering this course for free for the first 100 people, but now that's less. I think it's like maybe 68 now. So we got our spots are getting smaller, but that's fine. Again, if you want to join us, feel free. Our second cohort will start at the end of this 3 weeks. So in 3 more weeks, our second cohort will start. So we'll get you in on that class. And in the meantime, just continue to work on you. This is a time of year to really assess your goals for the new year. Figure out how you want this year to go and make moves every single day towards those goals. All right. That's what it's about. All right, folks. It's been fun. Appreciate y'all. Auntie, I appreciate you more. Rob, what up, King? Good to see you. K2 Souls, what's up? All right, folks. I'll catch you guys next week, Wednesday. I think, I don't know the topic for next week. I don't want to talk about, but we'll figure something out. And I'll actually post it before we actually get into the live so that you guys know what we're going to be discussing. But in the meantime, like I said, just, work on your tax return right now. All of you should have your W-2s and your tax documents. They have to give it to you by January 28th. So, feel free to, reach out if you have any questions about certain ways that you can do things when it comes to your tax return. But in the meantime, find a professional, go through it yourself, and just get familiar with what they're going to be looking for on that return. Because it's going to make you a better business person. It's going to make you a better, worker. It's going to make you a better person in general, knowing exactly what things to look out for year by year on your tax return. All right. All right, folks. Peace out. I'll catch you guys next week. Till then, stay good, stay safe. And if you had a blizzard or you're having a blizzard soon, buy a shovel for your car. That's my tip for y'all this week. Buy a small shovel and put it in your trunk. You'll thank me later. All right, folks. I'll talk to you guys next week, man. Peace. All right, YouTube. I'll catch you guys next week, yo. You guys take care, all right? Peace.